Hey everyone, welcome back to Corporate Decoder. Today we're diving into Douglas Emmett's latest proxy statement, which is basically their homework assignment before their annual shareholder meeting. And let me tell you, after looking into it, the only thing missing here was a request for money from the stockholders, like a charity. So let's get started. First off, this document is a notice for their annual meeting telling stockholders about the important stuff they'll be voting on. Think of it as a school board meeting, but with more money and fewer angry parents, where you decide who's on the board, who's auditing the books, and whether the executives are getting paid too much. Now, who actually gets to vote? Well, it's the people holding the company's common stock as of April 1, 2025. As of that date, there were about 167 million shares floating around. Each share gets one vote and no one gets extra voting power. But when we look into it, it appears the insiders and the major players actually hold almost 30 million shares, which is like 15% of the company. So it would appear that what the small investors think doesn't really matter. Speaking of major players, the Vanguard Group and BlackRock each own a huge chunk of the company, over 14% each. Basically, if these guys vote together, they decide everything. The first big item on the agenda is electing 8 directors to the board. The board was previously made up of 10 people. 2 directors are retiring and there will not be any new directors nominated. So now we're voting for 8 people to watch over the company until the next election. The board recommends voting for all their nominees. That's not really a surprise, is it? Next up, we're asked to approve Ernst & Young as the company's independent accounting firm for 2025. This is like saying, hey, do we trust these guys to check our math? Again, the board says for, it's generally a formality, but still needs to be approved by the stockholders. Finally, we get to the say on pay vote. This is where stockholders get to voice their opinion on how much the top executives are making. Now, it's a non-binding vote, meaning the board doesn't have to listen, but it's a good way to make your feelings known. The company claims most of the executive pay is tied to performance, with fancy goals and hurdles they have to clear. The executives were awarded a significant bonus. In fact, CEO's salary was the lowest among their benchmark group. The real money comes from restricted stock that executives can't sell for several years. The company is also saying that the executives have a lot of their own money invested in the stock, aligning their interests with the stockholders. As of April, they collectively held shares equivalent to about $581 million. So at least on paper, they want the stock to do well. And unsurprisingly, the board recommends voting for the executive compensation. Let's talk about corporate governance. This is how the company sets its own rules to stay honest and efficient. They have a code of ethics available for all to see. This covers things like honesty, fair dealing, and obeying the law, basically what you'd expect. The company also has equity ownership requirements, forcing executives and directors to own a certain amount of stock to align their interests with the company. Most board members are considered independent, meaning they don't have close ties to the company's management and can offer a fresh perspective. With the current chairman retiring, the board of directors will address the matter of future leadership structure at its scheduled meeting in May. So it appears there's an open spot. The board takes risk management seriously, making sure to watch things like cybersecurity. There is a strict policy against insider trading. The policy restricts their board members, officers, and employees from engaging in short sales of their securities. The board met 4 times and acted by written consent 4 times during 2024. There are also committees for nominations, audits, and compensation, each with specific roles. The compensation committee gets to decide the executive pay. The compensation committee reviewed the payment policies. This section confirms that the compensation committee members aren't entangled in any messy relationships with the company's executives. It lists all the top dogs with short bios, and we've already talked about compensation. Now, diving into the compensation discussion and analysis, or CD&A, it's like the company's explanation for why they pay their executives what they do. The company primarily uses base salaries and long-term incentives to pay their named executive officers. The compensation philosophy is heavily based on the company's performance. A huge amount of CEO's compensation is tied to the performance. In 2024, the company set goals for FFO, shareholder return, ESG, and operating activities to determine executive bonuses. The company said, after looking at all the factors, that our CEO and COO were performing well and will continue to perform to earn their bonuses. The compensation committee hires outside experts to assist in determining executive pay. The company says that executive officers assist with compensation decisions. If the company changes hands, the executives are in line for some payouts. There is no single trigger on the change of control, so there must be additional terminations for payments. Here's where it gets interesting, the summary compensation table. Let's zero in on some key numbers for 2024. Jordan Kaplan, the CEO, pulled in a total of about $9 million, mostly from stock awards. Kenneth Panzer, the COO, also made around the same amount. The other executives are in the $2 million range. This gives you a quick sense of the compensation structure. The ratio of CEO paid to the median employee is 128:1, which is actually in line with many other REITs. The pay versus performance table gives the link between executive compensation and company performance for each of 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2020, 2021, and 2020. The table sets forth key details on the overall value of the executive's compensation. Non-employee directors get LTIP units with a face value of around $220,000. It's basically their annual fee for showing up and providing oversight. The company had 4.6 million shares for outstanding options. However, there are no outstanding options, so this is a useless metric. The audit committee reviews the books and recommends the financial statements to the board. They basically say, yep, the numbers look good to us. The company paid Ernst & Young around $2,224 for audit and tax services. Here's where we see if anyone's making deals that benefit themselves instead of the company. The chairman of the board's family office leases space from the company, and the CFO has a residential lease, but they are all at market value, so everything appears to be fair. There are also family members of executives working at the company. They are being paid consistent with other employees with the same level of experience, so everything is fair. If you want to submit a proposal for the next annual meeting, mark your calendars. There are deadlines to keep in mind. Finally, there's a section on forward-looking statements. It's basically a disclaimer saying, hey, we're making predictions about the future, but things could change, so don't hold us to it. Now, looking at this proxy statement as a whole, I would have to conclude that Douglas Emmett has a relatively standard governance structure. Douglas Emmett seems to be heading in a reasonable direction, focusing on incentives based on the metrics that can be tracked and compared across REIT companies. And while the real estate market always carries inherent risks, and Douglas Emmett could face challenges from rising interest rates or changing demand for office space. One risk that is not discussed in this statement is a mixed bag. There are a lot of details that don't appear to be relevant, but everything looks okay. Thanks for watching. If you enjoyed this corporate deep dive, please give us a like, drop a comment, and subscribe for more Decoder action.